Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the market, that is the crypto market, the NFT market, and how to hopefully make some or maybe even a lot of money on the internet. Loaded up for discussion today. We have a general market pullback on the day. ETH is down a few percent, XRP is down 12%, Sol's down 8%. We'll be talking about what we think about the general pullback, as well as some interesting things that are seriously outperforming here. So we'll get into that and what we think about it. We'll talk about Citadel writing to the SEC to caution about tokenized stocks becoming or potentially draining liquidity from the traditional equity markets. We'll get into what that means, why that is significant. And then finally, Goldman Sachs and BNY team up to launch tokens tied to money market funds. A lot of stuff's coming on chain. The dream is finally playing out. So we'll explain a little bit what's going on there, as well as going through the usual price action on crypto and NFTs, and a general discussion on how we are thinking about allocating into a market which is increasingly getting hotter. So stay tuned for that. I've got Legendary in the co-host seat with me today. We're looking forward to get into it. But just a reminder, friends, before we do, nothing that we say here, unfortunately, is financial advice. The market is very risky. It goes up, it goes down. We don't know anything for sure. So please proceed with caution and exercise your own judgment at all times. With that out of the way, Legendary, it's Thursday. It's the 24th of July. How are you doing? How are you feeling?
I'm doing quite well. Not gonna lie, I'm happy to be flying back to Vienna this evening. I feel like the Wi-Fi in the hotel worked well. I told you before the show, for the first 3 days, everything went smoothly. You know, I'm paying for the ultra fast Wi-Fi. And then all of a sudden yesterday, like, things got worse. And now it's getting to the point where it starts to annoy me. And I'm like very, very much looking forward to be back at my own desk. It is probably the case. I used to just book hotels with tethered wired internet, but this one doesn't have that. But I'll either need to only be doing that, or all of us frankly need to do that, or we need to get the Tesla, what is it called?
Starlink.
Getting that. Starlink, yeah, because now they have the Starlink minis and just be traveling with them.
Well, I was just saying, Ledge, like, you know, we've always viewed the modern market as a sports team in some degree. We want like a lending partner, we want a DeFi partner, we want a blockchain partner, we want a gaming partner. All of these things are up for grabs. I did direct you recently. Find us the hotel partner, find us the travel partner who can meet the needs of the traveling daily show host. That's what we need. How's your progress been? I think I gave you that instruction 24 hours ago that this is on the agenda.
Yeah.
You going to tap anyone up?
I'd honestly pay for a company that does the following. Basically, they have a set of roadcasters, ultra wide screens, all the shit that I need. And then I'm telling you, I'm going to be in this hotel, I'm going to be in this Airbnb, or I'm going to be at that place. These are the dates. And when I get there, my shit is set up. And all I need to do is like plug in my MacBook and everything works. I would like legit pay, I don't know, like half an ETH for a service like that every time I use that.
Oh, so you need more like, you need on-demand podcasting facilities into where you stay. You don't need
like also my extra screens, all the things that I need. Just basically mirror my workstation that I have at home and place it wherever I go.
Workstations on demand.
Yeah.
Okay, that's not there might be a business idea there for digital nomads. Workstations on demand. If you are entrepreneurial in any way, let us know in the YouTube comments or in the Twitter comments if that is a decent idea or not. If that is viable, I'm going to review what people think about your entrepreneurial spirit, Legendary, in a second. But before we get there, let's get to the market updates, get you up to speed as usual with what is going on in the market, starting with the majors. As always, we've got Bitcoin flat at $118,000. You've got ETH actually flat as well now, it looks like, just at around 3.6K. XRP is down relatively big compared to those other things, down 10%. It did go on a pretty huge run though, down 10% to $3.08. BNB is down 4% as well to 758. That is still up 5% on the week, and it did go past $800 not long ago. So big moves on BNB. Solana's down 6% as well to 183. And then also Hyperliquid's been leaking a little bit here, down 4% to 42. Sui's down 5% to $3.66. So general pullbacks across the board in the majors. In the meme coin side of things, also general pullbacks with a couple of notable outperformers. Doge is down 8%, Pepe's down 8%, Pengu's down 10%, Trump's down 7%, SPX is down 8%, Fartcoin is down 14%, Pump is down 15%, Pump being down 15%, most likely because of the interview that took place yesterday with Thread Guy, where I think, amongst other things, one of the key takeaways was that yes, there will be an airdrop for Pump Fund users, but it will not. It's kind of not scheduled. There's no details as to when that would be yet, and I think the market did not like that. So really trading down aggressively, down 15% on the day, 44% on the week. I don't think people necessarily saw that. WIF is down 13%. MOG is down 8% as well. So look, pretty much red across the board. The two notable outperformers is that Bonk is up 3%. Obviously, the token for the Let's Bonk marketplace, the meme coin launchpad on Solana that is currently eating market share from Pump Fun. And as we've spoken about a lot on the show, REKT. REKT is up 17% in the last 24 hours, whilst the rest of the market is going through some type of carnage. I think that's 12 all-time highs in 12 days. We've been speaking about this for quite some time. Disclosures that we are significantly invested.
There was
that is
yesterday
incredibly outperforming.
Yeah, there was one tip yesterday for REKT, and I saw Zeneca posting that he saw the tip and he wanted to clip 10 ETH in, but he was like, I'm going to take the dog out for a walk before I'm going to do the 10 ETH clip. The moment he came back, it filled and sent to a new all-time high already.
Yes, pretty aggressive. If you've like watched the price action on REKT, I don't know who's buying these dips like so aggressively, but every time someone, whether it's a whale or whether someone gets an airdrop and there's like a bit of a sell-off, I've rarely seen people buy the dip like so aggressively on a token. Like it's quite uncommon to see that kind of price action. That's just what we've been observing. So, real outperformance there. The thing is, and look, I know we're biased and we've already disclosed our bias here. Like, it's just, in my opinion, it's still cheap relative to other things. Like, think of things that are 300 mil market cap. Like, this is a brand that just announced yesterday or the day before that they've got their new, what's it called? Partnership is with Binance US. And they've got a drink, like, I think it's called Liquid Gold. They've got a partnership with Liquid Gold. They've just done a drink with Abstract. They've just done a drink with OpenSea. They've just did a drink with Jupiter. These are like all the very, very top brands in the space. And, all of those tokens and all those things are expected to be much higher. It still feels mispriced, in my opinion, and take that with the pinch of salt required because we're biased. So that's our opinion and our bias. Ledge, anything else on price action there? I mean, we touched on Pump Fun, maybe some thoughts there, or anything else on REKT, or just a general pullback?
Another price action that might be worthwhile pointing out is Pirate Nation.
Okay.
We get the chart up.
That's an interesting one.
We had the news yesterday. Pirate Nation, speaking and typing, awesome. Pirate Nation is up 30%. Yeah, 30% on the day. There we go. This is the chart. This here, like the first run-up, was basically them announcing that ICO Beast is joining the team in a bread-esque role, so to speak. And the token price did like the price action. And also, it did maintain it. There was like an initial sell-off, but it did run up multiple times after that and did maintain a 30% surplus on the day. Market cap is not the highest. This is a token with an FTV of 56 mil, but it is a massive, massive move upwards.
That's pretty fascinating. It's pretty fascinating and a reminder of the importance of people. Like, sure, you can have a brand, you can have a product, people can like those things, but in, crypto Twitter is what it is. And sometimes having the right people on board can really make people believe in the future. I think that's what it's an expression of, right? Like, people trust ICO. They think he does a great job doing what he does. In order for him to have accepted, I think this is the line of thinking which creates the value. In order for him to have accepted, proof of play and Pirate Nation must be doing something interesting or good. Therefore, we can place that bet, because you're kind of inserting some of your trust into ICO's judgment, into making that call, right? And it shows that I think that definitely plays out. And I think that's actually an investment line of thinking that I use in general, where you see specific investors who have a good track record or who you respect for any particular reason, and you see them do a particular thing, and therefore you are able to de-risk that investment in your mind, or you get more bullish on it because they've confirmed something that you were thinking already. Doesn't mean that you can not think about it at all and completely outsource your thinking, but I think that's at least part of the thinking that's going on there. So that's pretty cool. Obviously, Proof of Play, we were partnered with for quite some time. Adam is a good friend. They are doing good work. So it's nice to see teams who are doing good work find good people and see some positive performance. Getting into the headlines themselves, I wanted to share a couple of things. Of course, the market's generally pulling back. We know that already. Citadel, we're going to be talking about, writing to the SEC to caution about tokenized stocks because they could drain liquidity from traditional equity markets. I actually asked Grok that. I'll be doing that section, and Grok's analysis was pretty decent. So we'll be going through an analysis with Grok for why Citadel is writing this and why it's significant. Goldman Sachs and BNY team up to launch tokens tied to money market funds. So again, interesting to note, a lot of these headlines now are moving outside of the core crypto universe into bigger things. So we'll talk about the big things, but we'll also talk about the market itself in a bit more depth. Anything on the NFT side, Legendary, that we need to know before we get into the rest of the roundup?
NFTs are actually pretty flat on the day. I mean, yes, Pudgies are down 2%. Miletis are up 2%. Not too many big movers. The only thing maybe to point up again is a bit of a sell-off in the Moonbirds collection. Moonbirds now down 10%, back to 1.6 ETH floor. So basically that collection is still up more than 100% over the last week, but has been oscillating between that 1.5 to 1.8 ETH price floor. And maybe also notable in terms with REKT price action on the ERC20 side of things is the fact that the REKT collection is also up 44% over the week. Ooh. At a 0.6 ETH floor.
Tasty price action in all of the REKT community. One direction I want to take a conversation, Legendary, is we're going to be talking about hero trades a little bit today before we get into the main topics, because I feel like we're in that moment of time where people are seeing things go vertical and just trying to assess like the risk reward on things. People are thinking maybe they've missed certain things, and I think it'll be interesting to personally reflect on how we are attempting to hit the big home run or hit the hero trade and what the risks are. So there's a really interesting long piece written by Jason Choi, which we're going to talk about in a second. So we'll get there in a moment. The rest of the roundup, to get you up to speed, this is a crucial date, I think. President's Working Group on Digital Assets will publish their report on July the 30th. That is 6 days away. I'm super intrigued as to what's going to get published there. Bo Hines, who's been in charge of working directly underneath David Sachs as part of the, in the crypto AI front, but Bo Hines has been focusing on the crypto side, and they've been constantly saying, there's been so many media clips coming out saying that they just want to get as much Bitcoin as they can. So I'm really, really curious if you've got a date to put in your calendar. July the 30th is this report getting published. So keep an eye out for that. And actually, in this kind of market, you want to keep an eye on hyperliquid or price action beforehand, because there have definitely been times where official stuff or official tariff announcements are about to come, and you've seen like big spikes in the market like less than 24 hours before that. So keep an eye out. July 29th, I would say. Tether CEO says plan for entrance into US institutional stablecoin market is well underway. Going to be huge competition for the stablecoin market. We hear all kinds of traditional banks wanting to get into that business, but Tether is going to enter it as well. This was interesting. HYLQ announces an $8 million private placement to run a hype treasury strategy and invest in the hyperliquid ecosystem. Kind of intrigued by that. I'm going to need to double click on it. It's an $8 million offering to essentially run the treasury strategy for hype. Joe McCann, people might have seen this and been slightly entertained or dismayed, frankly, closes down Asymmetric's liquid alpha fund after allegedly losing 75% farming hyperliquid. It was a liquid fund. Apparently it was, I don't know if it was short ETH, but it was definitely doing something on hyperliquid, and the justification for losing all that money was allegedly that, part of some type of interesting strategy. You call it some kind of strategy. What else can you do when you lose 75% of a liquid fund in 6 months of the year? So I think there's a bit of damage control being done there. Hate to see that for investors, and actually as a manager as well, that must be pretty tough. I don't know if that's the right kind of strategy to be doing, but I guess the risks in this industry. Bonk Meme Coin Launchpad announces 1% revenue pledge to buy back top tokens. This is really, I think, putting the knife into Pump a little bit, in the sense that Pump is struggling. Bonk keeps coming out with like more pro community pieces of news. So I think Pump Fund really need to figure out what's in it for the community at the moment. If you're going to withhold that airdrop, how are you going to get your community back on side? Because Bonk keep taking advantage, I think, at the moment. So that's interesting to see. This is a blast from the past. Pixelvault announces winding down of operations. Beanie offers to buy the IP for $1. If people don't know, there's a bit of B-check lore. Pixelvault was one of the places where I was like most successful as an investor / trader. 2021 NFT season was huge. Pixelvault was a huge company. They raised, I believe, 100 mil at one point in time, and it's just kind of been down only since some of those highs. They had NFTs that were selling for 10 ETH each. There was founders tokens that were 10 ETH each. There were like multiple assets that were worth 10 ETH each. It's crazy to think back. Fortunately, I pressed the sell button on some of them, not all. But now that it looks like that IP is up for sale, and Beanie, of all people, very notable, sometimes controversial character on CT, is in the mix for taking it over. So I'm kind of intrigued. That's one that's close to my heart, because it was one of the first things that got me to believe in NFTs and the IP kind of revolution. So I'll keep an eye out there. Popular artist Murakami announces collectible cards to be launched on Base. This is part of their big focus on their new app. Yuga Labs' case against Ryder Rips is sent back to the lower court to decide whether a typical NFT buyer would have been confused about legitimacy of Rips' knockoff collection. Remember, this is a court case between Yuga Labs and someone who created a copy collection that looked exactly the same and was starting to make money off it. So that's going back to be decided on. And the next set of FTX creditor payments of around 1.9 billion will take place on September the 30th. So still some time out, but that decision's been made. Ledge, got a lot of news there, kind of packed in together. Before we get into the main headlines, here for some reactions or things that are catching your attention. What do you like? What are you interested in?
Yes, a couple of things I want to comment on. Quick comment on the Tether CEO planning his entry into US institutional stablecoin markets. Very curious to see. He's obviously, talking about my own bags here. Is if Plasma is a part of that plan, which I very, very much would like to see. A second comment on Joe McCann: if your fund strategy, if you have a liquid fund and your strategy is to farm an airdrop, which can be a very good strategy, why do you take directional risk? Like, why don't you do this in a delta neutral way? This is the part I don't understand. Like, either you're a fund which is taking a directional risk and you blow it up because you bet the wrong way and you're going in the wrong direction, or you're here to farm airdrops, and then you do that in a delta neutral way, and that shouldn't be the case. Combining both feels a bit weird to me. And then the thing I want to comment a bit more on, Pixel Vault is also a place where I enjoyed spending a lot of time, enjoyed trading a lot. Also led me early into Wolf Game, where I made some very, very close friends, some in real life friends. It's also the reason that we met in person, not
Yes.
Wolf Game, that is, but Pixel Vault, that was in Lisbon 3 years ago or so, and started all of the things that we're doing up to this day. The thing I would be really interested to see, and that's, companies can fail, that's fair, but I would be very curious to see like sort of a case study. They raised a ton of money. They raised, as you said, I think 100 million, the 1 billion plus valuation. What was the burn rate? Where did the money go? Not like to try to make them accountable for something. That's not the point here. It would be, I think, really educational to see what happened with the money, and how did it get to a point where they're like, yeah, this is just not worth to pursue anymore. We basically didn't manage to do this a success despite trying our very, very best. I find stories of failure very, very educational, and that's certainly one that was very close to heart for me as well. So it'd be interesting to have a bit more insights there.
Yeah, I agree. That'd be pretty interesting to see. And yeah, if there was no Pix Vault, there would be no modern market, maybe, potentially, because that's exactly how we met in that specific Discord in 2022, I believe. So that would it's a bit of a throwback to see that in the news. Okay, one quick shout out to Carpenter, who said Legendary just pitched the next $1 million idea for workstations. Workstations on demand. I don't know. You don't seem to get much else support, Legendary, for this idea. So I'm not sure if that's going to be the most.
Sorry, one more sentence on that, because I was thinking a bit more on that. Actually, if the Apple Vision Pro glasses were a bit better, a bit lighter, that would be it. You put the glasses on, you have your virtual workstation wherever you go, and you work with that.
Okay.
So that would actually be a product for me in a further iteration.
Tech solution for all our problems, I suspect. Okay, look, this is the conversation I wanted to get into before the main headlines today. It's an article, not an article, just a long post on Twitter written by Jason Choi called "On Hero Trades," and I think it might just be worth reflecting on it, because I wanted to get your perspective on it, because we're in a time of the market where a lot of things are just completely ripped. Like a lot of things are up so much more than people thought. A lot of trades, whether it's, Bitcoin ultimately is up a lot so far this year. ETH has just gone on this colossal run. Solana's looking pretty good. All of these alts have just moved incredibly much higher than where they were as well. And I guess thinking in terms of risk reward, like how much risk do people want to put on at this stage in the cycle, where people are probably wondering, you're seeing some of like XRP running pretty hard, seeing things like Litecoin running hard. And, typically whilst that's a fun period of time because the rest of things are going up, you also want to keep one cautious eye out for like, okay, we're certainly not at the beginning now, right? We're not at the beginning. We might very well be in a transfer of wealth period where digital assets have become completely normalized. And that means that, some of these assets are going to be much stronger and maybe some of the volatility stops. However, it's not going to be the case for all assets, especially on down the further risky end of the spectrum. So this post kind of went into the idea of the hero trade, where Jason, who is a very he's investing at Tangent, which is quite a well-known fund in crypto, said every year without exception, I will hear about a hero trade. It takes the form of some fund going full stack into a coin at the lows, sometimes with hair-raising leverage, calling for a reversion that few dared or even dream of, or going max short at the top of the cycle, calling for a reckoning for all the profligacies of the crypto bull market, being lambasted publicly for being bearish before ultimately being right. And he says all hero trades share one thing in common: someone having a contrarian view, being quite public about it, and sizing aggressively before being right in a big way. And people absolutely love that. So he's making the point, like, people like to try to put on a hero trade because A, it's obviously the most profitable. B, people love it. They lap it up every single time. People love underdog stories where someone proved everyone wrong. Who doesn't want to believe in an all it takes is one good hit type of story? So the article kind of just goes on to suggest that this is like one of the most dangerous things that you can do, because you get into this kind of psychology where you build your first big win by learning to tune out dissent and by betting aggressively. So your framework adapts to that. You win big. In order to win big, you think that you have to bet big. And to bet big, you must have conviction. To have conviction, you must ignore everyone else and what they say. And then you start to like stop thinking about your normal entries and exit points because your numbers have got bigger, and therefore you don't use the same kind of discipline to take profits than when you would previously when you had less. But now because you have more, you think you have to make more, and then this becomes like this terrible cycle where you become like sloppy and stop practicing like the good things that you're supposed to do that probably got you into this successful position in the first place. So, I mean, the post goes on to talk about this a little bit more, but I'm curious. I'm the final take. One of the final sentences is there's something poetic about hero trades, often planting the seeds for eventual demise. If you're lucky enough to hit a hero trade, congratulations. Just don't start thinking you are the actual hero of the story. And I just thought, I don't know, it's kind of a sobering read. I do think that we see this a lot in crypto, and I wanted to bring that up today as like I don't know, just a point for conversation, literally coming to you for some reflections here. Do you have any hero trades on in your mind at the moment? Like, if you do, what are your hero trades, and how are you going to make sure that you don't believe yourself to be the hero, and like you keep the discipline that you should, or just how are you thinking about that?
Yeah, no, I like that long post very, very much. I think in terms of, okay, there's multiple thoughts. Let me dissect it maybe with my personal experience first. In terms of hero trades, I had hero trades in the past, and the part that you then blow up the fund, it did exactly apply for me as well. I had Axie, I got the AXS airdrop, Axie Infinity, that was at 20 cents or what, and it did run up to $140. That was an insane amount to be up on that, which I held all the way up. I held Quick all the way up, which was the first DEX to be popular on Polygon, which went from $3 back then when Aavegotchi, the game, bridged to Polygon, all the way to $1,000 something, and I took profits on those things too. But then I just went into the next investment, was like, full stacking into that as well. And I did blow it up. And that was the big learning when I made all of that and more back in this cycle, that I think a hero trade can become toxic if you're all in. Because if you're all in with something, yes, you're going to win way, way bigger. But obviously you will have the temptation, if you win, to move those funds into the next thing and potentially blow it up once you're betting on the wrong horse. So for me personally, what I now see more as my like hero trades is something where I go in with a decent size, may that be 2% or 3% of my portfolio, win that, and then add like, I don't know, 20% to my total net worth, because that 10x 30% to my total net worth. Or a smaller bet, a degenerate bet, where I do like 0.1% of my net worth into that at 100x's, and it adds 10% to my net worth. Like, this is now my type of hero trade. I think I got probably the one I would classify as that which I have currently going would be Plasma for me, if that works out to be a nice thing. And then the other thing where I certainly have the most exposure right now is everything Mega ETH related. I mean, it's probably something that people do see on the timeline, that I've been accumulating bad buns and investing in seed rounds and Mega ETH projects, doing advisory for some companies there. So I do have quite some bundled exposure there as well. But I'm not all in. Like, if all of that fails and Mega ETH doesn't do anything and nobody cares about that, I'm fine. I'm just, going to be sad maybe. but more so because Brett is a good friend and is doing awesome work there. But portfolio wise, I'm going to be fine. I'm going to be able to invest into the next thing. So this is how I changed my perception of hero trades very, very strongly after having round tripped so much myself last cycle.
Really interesting. I think two interesting things from what you just said, and I'll actually give a counter perspective in some respects. One is it's interesting to hear you talk in terms of percentages. I think sometimes people just like to throw around a number, and numbers don't really mean anything unless it's attached to the other stuff that you own. Like you're talking about 1%, 2%, 0.5%. Like saying 10K doesn't mean anything for anyone because you don't know what proportion that is to the rest of their packet, their portfolio. So I think that's important to note. And then maybe a little bit of, and actually I think some of the numbers that you're saying probably sounds quite low to people. Like if you say that out loud and you think the hero trade is like 2%, I mean, obviously the numbers might be quite big, but I've seen people's portfolios shared sometimes like, all right, I'm 30, 40% in one particular asset. And it's like, it's really, really high. And actually, maybe that might make sense for someone who is earlier on in their journey. One thing that I would say though, because I see this a lot on crypto Twitter, and I want to put something out there for like the more conservative, arguably responsible, I'm going to put that out there, legendary, arguably more responsible portfolio managers, where it's like, it's almost seems to be accepted that everyone, like it's completely fine. You're going to blow up. It's like part of the process. And, you know, it's all part of the game. And now touch wood, I'm literally touching wood as I say this. I'm not one of the people who's blown up before, but I think what that probably means is that I don't have the same, well, I have had on a relative basis, I probably haven't had the crazy spikes up, although on a normal basis against anyone normal in the world, I think I have had a crazy spike up, but I'm generally protected on the downside in a number of ways. Now, I'm touching wood, hopefully I don't blow up. And you know, accepting things like hacks and things like that, which could, I guess, potentially happen to anyone in some terrible way. But the point is, I think risk, I'm just putting it out there that you don't always need to get lulled into the feeling on crypto Twitter that you have to make this incredibly hugely sized bet in order to make it. Like you really do not. And this is actually the way I've kind of been changing my way of thinking here. When I saw Sol run up from, I don't know, $8 to 200 something, I just started thinking like, what are we doing here? Like all you need to hit is the main trade of a cycle. Like you need to be well allocated to like the few main things each cycle, and you're going to outperform the whole world in everything. So obviously in this cycle, at least to date, it's been hyperliquid. Like if you were able to hit that in reasonable size, and I think we did, maybe not perfectly in the way that would have been a dream scenario, but you can't always get these things perfect, but that would have been great. Now you pair that with something like a thesis that we shared on both Pengu and REKT, like a few weeks ago on the show, whether it's 1 or 2 weeks ago or 3 weeks ago, whatever, like that's a pretty sizable move up too. And so like, how many more things do you want to get right in a cycle? You want to take 1,000 bets and put things all over the place. And then remember, pairing this with like a strong holding of Bitcoin means that you're kind of protected to the downside, in my opinion. So I'm just putting it out there that sometimes I think people feel pressure in this industry to like make the hero trade, which is what this article is all about. And actually, like I would very much go against that. Like, well, I would agree with the article and go against with the idea that although I know a lot of people who have blown up and have made it back, and this is the best industry possible for you to make it back, I just 100% think you do not need to take that path in order to, you know, quote unquote, make it and, you know, significantly improve your life in the way that, in a direction that you want to. Very curious that as soon as I said the word Bitcoin, Funky's hand went up. Funky, welcome to the stage, my man. What are your thoughts on this kind of portfolio discussion, this concept of the hero trade? How are you managing your trades, and maybe some of like the protection against the ego that comes with, you know, doing particularly well?
I love this discussion. I mean, it's really just, I think, all around very enlightening. I think it's very instructive for people who are listening in too. I think the other problem with a hero trade is that it starts to build in some sort of infallibility, like it's just going to increase in value forever. Like I had a couple like this. Solana's a good example. In the last cycle, bought it at $2 and change, and I didn't have. I mean, I had a significant amount of Solana, I guess, for back then. But like when it went to $100, I waited for it to go all the way to $100 from $2 before I even took any profits. And then I waited, and it was like a week later, for those who remember the last cycle, where it went to 200. I sold some more, but I didn't sell enough. And it was only when the market really started to turn that I realized, oh, I better dump all these other positions. And the only thing I really didn't sell was my Bitcoin and my ETH into the bear market. So I think that's another thing you got to be wary of. And I think in some sense, if you want to call it the anti-hero trade, I also remember in the last cycle back in 2020, 2021, when we were accumulating a lot of Bitcoin, and I came to the Polkadot ecosystem, and everybody teased me like, oh, you're never going to get rich off Bitcoin. You need Polkadot, you need alts. Like that's always the thing, right? And because War Daddy Capital is not here today, I want to remind people on a Thursday that Bitcoin is the end game. And even the last bear early bull, let's say 2023, as the market was starting to resume, like you think March of 23, when they had the Signature Bank and all those like meltdowns, and all of a sudden Bitcoin started pushing back above 30K. We were continuing to DC into Bitcoin, but I started buying like AVAX. Oh, AVAX is $8. Or let me buy into some of these high quality alts again. If I had taken every single one of those dollars and just focused on Bitcoin and Bitcoin only, the Bitcoin stack would be that much bigger. And this is where my wife, Erin, she's kind of like a maxi, because she's like, what's the point? Like she knows that I've been consolidating a lot of our alts and going into Tau, because I think Bitensor has a really strong future because of the tokenomics and whatnot. But she's like, it's still not Bitcoin. So I think that there's something to be said about, like, as you guys were saying, protecting the downside. And I'm glad that both of you have also kind of grabbed onto this thesis and started moving some money into Bitcoin. Because I mean, like today, the headlines, the market pulled back, and I wake up and I'm like, Bitcoin's 118. Life is great.
Yeah, that's a very good point. And I personally, when I say, I do 3% of my net worth in one asset for a trade, et cetera, I don't see Bitcoin as a trade. I just see it as a asset that I want to hold for the long term and take profits into. I think the only perspective I would want to add to that hero trade conversation is that it's also really a starting point of how much capital do you bring into this space. And if it's just $1,000, maybe just a couple $100, you will need to be more aggressive if you want to make life-changing gains.
Yes.
I think putting $1,000 into Bitcoin and hoping that even if BTC goes to 10 mil, you have 100K. That is a lot of money, certainly. But also, until BTC is not going to go to 10 mil anytime soon. Even if it goes to 1 mil, you just made 10K. So that's a risk profile that you have to be aware of. But I do like to benchmark against BTC performance and see if I outperform BTC. And if I reach a point in my trading journey where I stop doing that, then I will stop trading. And I will put my money in BTC and chill.
Yeah. Really interesting. Interesting conversation. Maybe a final point, a quick anecdote for me. I say that I, maybe don't take as much risk, relatively speaking, but there's a point. The thing that I think this is the danger that happens, because I remember this happening to me in 2021. I say that I don't take much risk, right? Or on a relative basis, although on the normal basis, I'm completely gone down the risk curve. In 2021, I probably woke up one day and I was going through my spreadsheets, and I realized that, like, I don't know, 90% of my net worth was in NFTs. So like, that's like a crazy thing to just realize. But I think the thing that happens in this space is that things can move so fast that you're not even on top of the proportions of where the stuff is. So if NFTs really move at any point, or if you're really aggressively allocated to meme coins and they balloon up to becoming some like crazy proportion of your portfolio, like you just need to be on top of that and manage that, because that was one of the reasons. So one of the smarter things I did was, when I realized that, I started pressing the sell button. It didn't matter whether I was bullish or bearish on the NFTs. It was just like, I need to press sell now, because too much of my net worth is in this incredibly new technology that I don't know if it's going to be around. So I did press sell significantly, and that's part of me rebalancing into something that seemed more sensible. And I think that's one of the things that people have to keep in mind as you like continually try to navigate this space. But shout out to Gio on the Modern Market comments on Twitter, saying the boring hero trade is just holding on to Bitcoin and making some small bets. the cycles will chip away at your Bitcoin stack if you let them. I think that's definitely a danger for people. Like, I think you want to have a core position in Bitcoin and then go about your business elsewhere with something that you're taking a bit more of a risk with. So very interesting conversation. We've gone a bit longer on that because I think that it was, but we do have a couple of headlines to get into today with you. General market takes here, Legendary, this stuff pulling back. I don't know if you want to tie the market pullback in with the headline piece of news that you wanted to do, or how you want to go about this, but what do we need to know here from a market perspective?
I want to do the market roundup a bit different and not focus too much on the stock side of things, but still give a general view that the S&P 500 actually looks pretty good. We have the financial side with JP Morgan being in the green on the day, 2%, Nvidia, as well as other semiconductor businesses, AMD being in the green, 2%. It is overall also a green day for healthcare, energy, and industrials as industry, so that doesn't look too bad. Neither does the pre-market, where we have the S&P 500 and the Nasdaq being up in the pre-market. Dow futures are down 0.4% in the pre-market, but that's actually a very, very nice board to look at. So for that reason, I want to focus more on A, one take by DPharma, and B, on something that I think could be an interesting opportunity. DPharma had this post out saying that everything but one little niche is looking weak to me. Unless we engulf today's candle within a day or two, I think we most likely just chop bleed until JPow speaks in a week and some, and then pick a direction again, up more likely than down. And he goes on to say that his bullish wildcard is NFTs leg up again after the big weekend sweeps, and interest keeps rising and books get thinner every day. So slide the leverage down, don't chop yourself to death, and enjoy your gains buying some JPEGs. That is one perspective I wanted to point out. And then for the opportunity, I looked at Polymarket because this is a bet I look at all the time, and I say it on the show quite often. And it is to do with what price ETH will hit in July, $5.4 million of volume in this specific market. And we had that when ETH was at 3.8K, 70% almost of the market thought, yep, it's going to do 4K in July. Now, this is down to 25%. So basically, the thinking here could be, if you think ETH has one more bullish day in July, it's basically only 10% away from hitting 4K. You could either go on that bet and try to 4x your money if that happens, or you could also just go in that bet at these low odds and think, if ETH just runs up a couple percent to 3.8 to 3.85K, that these odds might go back to 40, 50%, and you take some profits there as well. Obviously, the risk is that none of that happens and ETH trends down and you lose your money on that bet. But I think with the odds being so low at the moment, I personally have a bit of appetite to put some money into that bet and see if I can scrape a little bit of the upside if ETH has a bullish day over the next 7 days.
Interesting. Yeah, like one bullish day in the next 7 days would just move you up, and then you can de-risk.
Yeah, and I can cash out if I want to, because you can obviously trade out of the position at every time on Polymarket. And this market specifically has a good amount of volume that you will find a taker for your shares.
Interesting. Okay. Yeah, that's pretty interesting. Thanks for that summary. Any headline thoughts here, Legendary, in terms of the general kind of market structure and how you think the market is moving at the moment? Obviously, like a little bit of a pullback, as Funky said, barely anything on Bitcoin, just rock solid at 118. Any thoughts, bigger things? Like, as I mentioned in the roundup, I think this report that the digital asset working group are going to publish on the 30th is pretty interesting to me. That's like something that's upcoming, which I think will be interesting. Any news events on your horizon that you want to pay attention to?
I think JPow speaking, mentioned by DPharma, is a good point to watch as well. I think with the mains, with BTC and ETH being so close to all-time high, obviously BTC way closer than ETH percentage-wise, that's not a state where the market can probably exist for a longer period of time, and it will have to pick a direction, either going up or down on the next catalyst. And I tend to agree with DPharma that chances are higher that the next catalyst for that will be rather positive than negative. So don't have any worries at the moment as concerns the market.
Okay, that's pretty good to hear. Don't mind that at all. Getting into we've got 8 minutes left of the show today, so let's do the other couple of headlines and think of any significant points related to it. So we've got the next headline being Citadel writing to the SEC to caution about tokenized stocks because they could drain liquidity from traditional equity markets, is what they argue. This is the news that Citadel Securities is pressing US regulators to slow down on new rules that would enable widespread trading of tokenized securities, citing concerns about market disruption and investor confusion. They argued that allowing these blockchain-based products to advance without clear regulatory framework could create an unfair advantage for cryptocurrency platforms and drain liquidity from traditional equity markets. People like Backed Finance are involved in the tokenized universe. Gemini and Robinhood are getting involved in the tokenized stocks trading. I know Kraken has as well. One of the big differences here is that this is going to be 24/7, and that's not something that traditional markets trade yet. When I asked Grok, why would Citadel be putting this kind of fight up or raising these concerns, the correct answer, I guess, is that they're protecting market dominance and liquidity. Citadel is a major market maker handling roughly 26% of US equity volume and 47% of US listed retail volume. It relies on centralized exchanges and traditional market structures for its high frequency trading and market making profits. So I think this is clearly an attempt to just protect their bottom line. But I heard that they're also attempting to come into crypto. So, maybe they just want to protect their side of things first before they enter. But again, I think this speaks to the general merging of traditional markets with crypto markets. If you used to be a crypto market maker only, now you get the chance to be a crypto stock market maker, which is basically like being a market maker for stocks. And if you used to only do equities, I think the demand that has been demonstrated on the institutional side for all the ETFs and crypto exposure means that you're going to be involved in that game too, or you certainly don't want to let that game just go for no reason. You want to be a part of it. So I think that's probably the big takeaway. All this stuff's merging, as we know, and Citadel will be a part of it in some way. Ledge, any takes here on this, or any further reflections on stocks coming on chain?
Citadel is absurdly large. The volume that they do on things. I mean, you mentioned it. 35% of all US listed retail volume is insanely hard to comprehend how much that is. Even some other stats. As a market maker, we do 99% of traded volume in 3,000 US listed option names. So they're such a dominant force, and obviously having this market share is extremely lucrative. They did 3.4 billion net trading revenue in the first quarter of this year, and they want to protect that market share and keep printing billions every quarter.
Yeah. You would also have a problem with a different new business line if it was going to come after your billions of your billions of guaranteed flow. So I think that's what's going on there. Ledge, final headline of the day is to do with Goldman Sachs, BNY. What do we need to know here?
Yeah, absolutely. The news is that Goldman is teaming up with BNY to launch tokens tied to money market funds, which I thought is very, very interesting. A couple more details on that. Investors can now buy and sell money market fund shares on BNY's liquid direct platform with a digital record of those shares created on Goldman's blockchain system, the two financial giants said in a joint statement. And I think it's very interesting if we zoom out a bit and look at this as part of a bigger picture that we've been already painting this week. We had JP Morgan thinking about how to accept crypto as a collateral for loans. We had that Coinbase partnership with that large bank to offer banking services to Coinbase and crypto trading services to the bank customers. This is yet again another attempt of two absolute giants in the industry to bring a new product category, money market funds, to our space, to the DeFi space. So it really is a week where we see a lot of the biggest banks, asset managers in the States trying to place a sort of product or have a sort of strategy that gives them exposure to the crypto space, that allows them to place a tokenized product in the crypto space. And I think if you look at the regulatory week, the crypto week that we had before, and those 3 acts passing, which we discussed on the show, and where Funky did provide a ton of detail on that, it only makes sense now that this is the time to execute on the banking side, to find your way, how you want to be entering this space.
Is there any way for people who are listening and ourselves to get a greater exposure to the corporate entrance into the industry? So I guess the simple answer, as a few people have already noted today, the simple answer is to buy Bitcoin, because things taking place in crypto, the more people come into crypto, like directionally they'll end up at Bitcoin with some proportion of their net worth. Maybe ETH and Solana too, as that should capture some kind of corporate institutional demand, as being very popular blockchains. My view is that the treasury company strategy, where lots of people are raising currently at particular rates, trying to pump a share price, is not something that many people will be able to participate in, probably because you're not going to get in at the right price, and you're probably going to be buying after other people have bought, and those people, without understanding the schedule of unlocks, you're going to get dumped aggressively on, in the exact same way that you might get dumped by a VC token. You're likely to get dumped on in this new paradigm where people are creating these random companies, selling shares. They unlock at a certain time. You don't know when. You try and buy it as it accelerates up, and then a whole load of sell pressure comes on top of your head. So I actually don't think, I think there will be a bubble there. I just don't know if you can get in early enough for you to be participating like a good part of that bubble. I do think there's a chance for these Ethereum ones to be better than that. Although, you've got to research the tokenomics like really, really fully, like SBET and Tom Lee's Bitminer, potentially. Are those going to be better? You would certainly hope so, with all of the demand for ETH at the moment and the stories that they're telling, and the ETF inflows for ETH have certainly suggest that that story is working. So yeah, I guess that's my view. And I guess the final question, Ledge, was, are you trying to participate in that on the corporate side, or are you just going to do what we do best, which in a way is like our edges on chain? So is that where we just participate?
Yeah. I personally have been playing more with the crypto adjacent stocks, but I think if you want to participate in that, stock market is good. Let me pull up a few charts on that real quick, and then I also want to hear from Funky before we have to close out the show for the day. So S&P 500 year to date up 7.5%. Goldman Sachs Group year to date up 25%. Very similar picture for JP Morgan, up 24% over the year. Basically, just by having placed a bet on the big banks, instead of only being in the S&P 500, you would have outperformed the S&P 500 3x. So that is a bet, but I do think that year to date I can make more in crypto than 24%, which still is a very insane return. And again, like talking about hero trades, if someone places a big bet at the start of the year into some of the big US banks and makes 20% instead of the 7 that the S&P 500 did, that to me is a hero trade. You 3x'd the general stock market with that, which would have been an insane performance. Plus, you can do it with virtually any size. I mean, the market cap of JP Morgan is 800 bill. This is a trade that, as an institution, you can put a couple billions into that, which you can't put a couple billion to ETH at this price point that easily without being a treasury company who's then pumping the price. So you want to participate in that, either you have the edge on chain or you actually play the stock game. But really wanted to hear from Funky on that as well.
So just going along with the conversation that you guys were having about these whole treasury companies and everything else being in the stock market, last night I was having dinner. I don't know if you caught the post. I'm in Washington, D.C., so that's why I'm back on my AirPods. I'm going to be going to meet with legislators today at the federal level to talk about what we're doing with Arctic blockchain. And the CEO, we were having dinner last night, and he said he and the co-founder of ARC Ecosystems, they said if they get access as corporate guys, institutional investors for the new stretch thing, that they're basically just going to ape. And we talked a lot about the whole treasury company, what's going on, like just MicroStrategy and beyond. And we both kind of landed on the fact that we don't think it'll necessarily be the treasury companies themselves, whether MicroStrategy or any of the ones down. We feel like there will be at some point some sort of systemic risk because of all the financial chicanery that's going on with the dollar and everything else. That something else is going to break in the system that's going to see a cataclysmic downturn across all markets. And when that happens, will that force some of the smaller treasury companies to unwind their positions and the leverage and have to sell Bitcoin or ETH or whatever to get out of it? That's what kind of remains the big question. And it's just a question of when. That's kind of what we landed on. Is it going to happen in the next year, 2 years? We feel like something's going to happen because the Pawn Zoo can only keep up for so long, right? And if I see Bo Hines walking while I'm walking through the halls of the Capitol, I'll see if I can get a sneak peek on that report.
Yeah, please do. That would be fun. Appreciate the thoughts, Funky. I do think it's something to keep an eye on. Obviously, the treasury companies are taking over the snapshot every single morning. We're talking about them all the time, so we're going to have to keep tabs on that. One thing I said the other day, which I guess would be incredibly unpopular, is that I think that when everyone keeps saying that you don't want any dollars or that the dollar is useless, is the time when you probably want to have some dollars again. And I think, I'm not saying that we're there yet, but, I said the other day that I'm in the market for selling some NFTs, for example, which have recovered very nicely. Could the market go way higher than here? Sure. But I've held some and I'm either for a long time and are very valuable, or bought some more recently and they just are very valuable for a healthy profit. I sold one the other day for a good amount. And practicing the thing that you said, Ledge, which is when you make a big gain, just sit on it for a few days. So I'm sitting on it in dollars and I'm trying to decide how I like the market at the moment. And you know what? For the rest of the proportions of the way that I'm taking risk at the moment, I'm probably going to keep it in dollars. That's not going to be a popular thing at the moment because everyone wants to go risk on all the time. But then I think you ask yourself the question, is everyone right all the time? And again, I'm not saying that that's the top in any way. I'm saying that the thing that we were talking privately, Legendary, the other day is like before the top, you can't all get out at the top. Like say you're in a market, you're coin with like a few 100 mil market cap or $1 billion or whatever. Everyone can't get out at the same time at the top. So you might as well get out slowly over a period of time. And that's my kind of thinking with like, okay, this is one healthy NFT sale. I'm happy with it. I can sit on that. And I've got like incredible risk put on across the rest of the portfolio. Maybe in 2 weeks' time, I'm going to take something else off. Then in 2 weeks' time, again, I'm going to take something else off again. And that gets me to like December, and I've taken some off. Again, this is very much a work in progress, and it's going to be evaluated over time. At the moment, this is like the first time I've taken something off so far this cycle. So I guess I'm just sharing that as one way to look at it. And it's probably a little bit contrarian at the moment because everyone wants to dump everything into everything. And that might be the right decision for at least a little while still. Well, I hope it is because most of my risk is still on. So that's my final reflection there. Ledge, any final things? We've run a little bit over here, but final take before we close out.
I like that. That's sitting on the profits part. That's one of the best advices I got from Stats when I asked him what to do after a big gain. He was like, just chill and sit on that for a couple of weeks. You will get used to having that money and be very, very defensive about that and way less likely to lose it than making a big gain. And as I did with my Bored Apes last cycle, and then on the same day putting that into Pudgies, into all other NFTs, cool cats, and then they dipped a bit, and then I freaked out, and then I sold everything with a loss. Immediately had annihilated 25% of the gains that I had made with the ape 48 hours ago, or with the apes.
Exactly. So worth having a think about, guys. Hope you enjoyed the show. Good conversation today. Went off in a few different discussions, a bit more analytical on our portfolios and personal thoughts on allocation. So hope that was enjoyable as usual. Just a reminder, we do this every single day, Monday to Friday, 7 a.m. Eastern time for 1 hour live on X Video, YouTube. And you can catch us on Apple and Spotify if you prefer to catch up with your media in that way. Legendary. Thank you for co-hosting as always. And thanks to Funky for his contributions too. We will be back with you again tomorrow, same time, same place. Thank you so much for joining us. Have a wonderful day. Take care. We'll see you tomorrow. Bye-bye.